European inflation falls, but sticky services costs raise doubts for ECB inflation in the Eurozone's two largest economies has fallen to its lowest level since mid-2021. Still, services prices remain stubbornly strong, presenting the European Central Bank with a problem over when to cut interest rates. Both Germany and France benefited from weaker inflation in goods and food in February, but a rebound in energy costs and persistent growth in services prices partly offset this. In Spain, electricity prices slowed, but fuel costs accelerated. Since the disruption of the coronavirus pandemic and Russia's invasion of Ukraine triggered the biggest surge in consumer prices for a generation, Eurozone inflation has been slowing rapidly, leaving ECB policymakers trying to gauge how fast it will drop to their 2% target. The ECB is expected to cut its forecasts for inflation and growth when it meets next week in Frankfurt. But most economists believe it will keep saying it needs more evidence to be sure rising wages are not causing price pressures to flare up before it will lower borrowing costs. German inflation was 2.7% in the year to February, the Federal Statistical Agency said on Thursday, in line with economists' forecasts in a Reuters poll, and down from 3.1% in January. However, rapid wage growth kept services prices rising at a steady rate of 3.4% in Europe's largest economy. Core inflation, excluding volatile energy and food prices, also kept rising at the same pace. Carsten Brzeski, an economist at Dutch bank ING, said the persistence of underlying German price pressures, particularly for services, illustrates just how difficult the last mile will be for the ECB and argues against cutting rates too early. German wages rose 6% last year, outstripping the 5.9% average rate of inflation for the first time since the pandemic hit 4 years ago. However, consumers remained cautious at the start of this year, after retail sales fell 0.4% in January from the previous month. There was a similar picture in France, where inflation continued to fall in February, as faster growth in energy prices and steady increases in services prices offset a sharp slowdown in food costs. But French household spending declined 0.3% in January. Slower growth in French food and manufactured goods prices drove inflation in the Eurozone's second-largest economy down to 3.1% in the year to February, from 3.4% a month earlier, the National Statistics Agency said on Thursday. The latest French reading was its lowest level since September 2021, but was slightly above the 3% level forecast by economists in an earlier Reuters poll. Inflation in Spain fell in line with forecasts to 2.9% in February, taking it back below 3% for the first time in 6 months. But an acceleration in fuel prices partly offset lower growth in electricity costs, according to the country's statistics office. Eurozone-wide inflation data is expected to fall from 2.8% in January to 2.5% in February, when official figures are released on Friday. ECB President Christine Lagarde told the European Parliament this week that price growth was expected to continue slowing down as the impact of past upward shocks fades and tight financing conditions help to push down inflation. However, Lagarde said wage growth remained strong and would be an increasingly important driver of inflation dynamics in the coming quarters, reflecting employee demand for inflation compensation and tight labor markets. The ECB plans to release new price growth forecasts after its meeting next week. Goldman Sachs expects it to cut its forecast for Eurozone inflation this year from 2.7% to 2.3% and for next year from 2.1% to 2%, in line with the ECB's target.